Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus in today's trading session. And moving on, let's talk about steel stocks because a lot of stocks are in focus today on the back of a brokerage note coming in from Jefferies, because Jefferies has turned positive on India's steel sector, citing strong volume growth prospects and improving profitability. In its latest note on metals and mining, the broking firm has said that Indian steel companies are expected to deliver a strong 8 to 10% volume CAGR over FY25 to FY27, with safeguard duty aiding profitability. So when you take a look at their individual stock calls for Tata Steel, it remains a preferred pick for them, primarily on valuation grounds. They have hiked the target price for Tata Steel to 200 from 180. Earlier, that stock gaining with trades of almost 1%. For Jindal Stainless, they've initiated with a buy rating and a target price of 800 rupees per share. That stock up by 2.6%. JSW Steel, they've upgraded the stock from hold to buy, so that stock is up almost half a percent because the target price has been raised by 30% to 1200 rupees from 920 rupees earlier. For Coal India, they've maintained their buy rating with a target price of 455 rupees per share. That stock absolutely flat. Lastly, for Hindalco, they've downgraded the stock from buy to hold and target cut to 690 from 800 rupees earlier. So that's Hindalco, the stock that they are talking about, and Hindalco is absolutely flat right now with a slight negative bias. We also have a Motilal Oswal note coming in on Jindal Steel, wherein they've maintained their buy rating with a target price of 1100 rupees per share. So lots to watch out for when it comes to the metal pack, and you have Jefferies that's very positive when it comes to all of these steel stocks.
All right, so on the back of those brokerage notes, these counters are in focus today. The entire steel pack, in fact, Nifty Metal is a top sectoral gainer as well today. But moving on to the, another earnings candidate, that is TVS Supply Chain, that came out with its results, and the street has clearly given it a thumbs down because they have suffered a net loss of 3.9 crores versus a profit of 5.4 crore on a year-on-year basis. The revenues, however, saw an uptick of 3% on a year-on-year basis at 2,499 crores. The EBITDA was up 2.1% on a year-on-year basis at 169 crores, and the margins, however, saw a downtick of 6 basis points on a year-on-year basis at 6.8% versus the previous year. And on the back of that, TVS Supply Chain, the loss that they have incurred versus the profits of last year, TVS Supply Chain is down 1.3% on the back of that loss.
Okay, so TVS Supply Chain in slight pressure today, but let's also go across and listen into what Ravi Vishwanathan, the Managing Director, and R. Vaidyanathan, the Global Chief Financial Officer of TVS Supply Chain, had to say about the company's FY26 outlook and profit before tax for FY27.
And we are absolutely bullish going into the next year that we will continue on this momentum, and we will stay very focused on being a very profitable company as we exit FY27 12 months from now.
By FY27, our target is to move towards a 4% PBT, and we are committed to achieving that 4% PBT. And obviously, there are some tax where we need to work on improving the tax optimization, which we will do in FY26 and FY27. But our immediate priority is reach towards the 4% PBT by FY27.
All right, moving on then. Coming to you, Ravinder, another earnings candidate, Bata India, that has reported its Q4 results. Tell us, what does the report card look like?
Well, as Bata India has announced its Q4 number, and company reported revenue at rupees 788 crore as compared to 798 crore, which was down by 1.2% year-on-year basis. And if we talk about net profit, then company reported net profits at rupees 46 crore as compared to 64 crore, which was down by approx 28% on a yearly basis. And if we talk about EBITDA and EBITDA margin, then company's EBITDA margin was down by more than 2% year-on-year basis at rupees 178 crore as compared to 182 crore in Q4 FY24. And if we talk about EBITDA margins, then company's EBITDA margin also saw a decline of more than 21 basis point year-on-year basis from 22.8% to 22.6%. And Axis Capital has maintained their reduced rating on Bata India with target price of rupees 1330. So on back of weak Q4 numbers, stock is down more than 1% in today's trading session.
Okay, so that's the take on Bata India. Weak Q4 numbers coming in, and the stock is reflecting just that, a cut of 1.4%. But Kanishka, coming to you, Tata Chemicals, and here we have some management rejig happening, and when it comes to their board, take us through what it is.
That's right. Tata Chemicals is in focus today as Tata Sons chairman N. Chandrasekharan has stepped down as the chairman and director of Tata Chemicals effective today, that is May 29th. Now, this development was disclosed in a regulatory filing by the company yesterday. The Tata Chemicals Board of Directors formally acknowledged his decision to step down, and subsequently they've appointed S. Padmanabhan as who's an existing director of the company as the new chairman effective May 30th, that is tomorrow. Now, following this development, while the stocks at this point in time is down about almost 1%.
No problem, no problem. That and real estate as an entire pack is in focus today. Good moves coming in on Nifty Realty as well, and select stocks are in focus on the back of a Morgan Stanley note coming in. Remember, we spoke about Prestige just a while ago, wherein they've upgraded that stock as well, but some more upgrades coming in from Morgan Stanley on some of these real estate counters. DLF is the first one that they've spoken about. DLF, they've upgraded the stock to an overweight rating from equal weight earlier, but have slashed the target price nominally from 910 rupees earlier to 900 rupees now. They've upgraded DLF on attractive valuation. And they also say that DLF has a strong brand and land bank which offers margin protection. On the flip side, for Godrej Properties, they've downgraded the stock to an equal weight from overweight and cut the target price to 2400 from 3400 earlier. So that's quite a slash coming in on Godrej Properties as well. Very bearish outlook. The stock is down 0.3%. DLF doing very well today, up 3% on the back of this upgrade coming in. They've downgraded Godrej as they think that this may come at the expense of margin and leverage. So their growth is slightly sheltered because of both of these. So on the back of that, Godrej Properties a downgrade coming in. For Oberoi Realty, they've maintained an equal weight rating but have cut the target price to 1700 from 2060 rupees earlier. For Macrotech Developers also, they've maintained an equal weight but hiked the target price to 1400 from 1230 earlier. For the overall space, they say that India's real estate cycle continues to remain intact, albeit it seems like it's a late cycle. They still prefer companies with a higher growth profile. So that's Morgan Stanley's take on the entire real estate space. Mixed note coming in, some upgrades, some downgrades, and some stance maintains with some price target cuts coming in. So that's Morgan Stanley's outlook on the entire real estate space.
All right, that's Morgan Stanley's note on the real estate space. On the back of that, the real estate players are in focus today. Real estate trading with gains of 1% in trade today. But moving on to the next counter, Texmaco Rail, which has in focus today on the back of an order win. Ministry of Railway, wide it's they have awarded an order to the company for manufacturing and supply of 8 rakes of flat multi-purpose wagons to be executed within a period of 6 months, and this order is worth 140 crores. And on the back of that, Texmaco Rail is in focus today in the back of an order win. The sharp uptick coming in, it came in during the market hours, and a sharp rise since then. It's trading with gains of almost 1% in trade.
Okay, that's Texmaco Rail. Sharp spike coming in when that order win was announced, and stock is holding up well. But while we are talking about the railway space, Ravinder, IRCTC is the stock that you've picked out for us. It's an earnings candidate. Tell us what the Q4 report card looks like.
Well, as IRCTC has reported a Q4 number, and company reported PAT at rupees 358 crore as compared to 284 crore, which was up by 26% year-on-year basis. And if we talk about revenue, then company revenue saw an uptick of 10% on an annually basis from 1,152 crore to 1,269 crore. And EBITDA also saw an uptick of 6.5% year-on-year basis at rupees 385 crore. And if we talk about EBITDA margin, then EBITDA margin has decreased slightly from 31.5% to 30.4%. And Investec has maintained their buy rating with target price of rupees 200, and Macquarie has also maintained their outperform rating with target price of rupees 900. So a mixed set of number of IRCTC in Q4, and the stock is down 0.3%.
Okay, so slight pressure coming in on IRCTC. Let's move away from that and talk about a stock that's in focus not on the back of its earnings but a positive news flow coming in. The stock is also doing well. That's Coofge, because Coofge has announced the launch of 2 new AI platforms, that's Quasar Gen AI Central and Quasar Marketplace. These initiatives mark a major step in Coofge's journey to accelerate responsible enterprise-wide AI adoption and deliver real-time innovation at scale. Now, Quasar Gen AI Central is an enterprise-grade, secure Gen AI playground that gives Coofge developers and engineers centralized access to top generative AI models like ChatGPT, Gemini, Llama, as well as Claude. Key features of Quasar Gen AI Central include centralized access to popular LLMs, like providing a single point of entry to a diverse range of powerful generative AI models. So, successful launch of 2 internal Gen AI models coming into new AI platforms. On the back of that, Coofge is trading with gains of more than 1% as we speak.
All right, that's Coofge for you. It's trading up 1.2%. But coming to you, Kanishka, Avanti Feeds is the name that you have picked out for us. Tell us what do we see for as far as the earnings are concerned for Avanti Feeds?
That's right. Avanti Feeds has seen actually a very healthy set of numbers when it comes to the March quarter. In Q4, it reported an almost 40% year-on-year jump in PAT at 157 crore rupees. This was mainly due to increase in revenue, decrease in raw material costs, and also better overhead absorption. Now, revenue from operations that stood at 1,385 crore rupees, up from 1,238 crore rupees in the year gone by. EBITDA margins also improved to 12.7% from 9.8% earlier. Now, on the back of these very healthy results, the stock is up over 3% in trade today.
Okay, so that's Avanti Feeds in focus. We also have our technical guest who's joining us, Kapil Shah, technical analyst at Emkay Global Financial Services. And Kapil, hi, thanks for joining us on the show. Let's talk about the first stock that you've picked out for us today. That's Concore, that Container Corp of India. Give us a sense of what you are seeing on the charts. The stock is holding up, at least in the green today, rather nominally. But 782 is where the stock is trading. What's the outlook going ahead?
Right. First of all, good afternoon, everyone. So basically, the Concore, we are seeing that from past couple of days, the traveling companies or basically freight-oriented companies have started to show some sorts of tractions. And the traveling solutions companies across the board, we have seen the positive momentum. Concore, after a very steep declining momentum of the 40%, 48% from the top, it has formed a good base and then it has started to pick up the momentum. So here we are seeing that this particular momentum can be continued for a couple of days further. 783 is the current level right now. Right now, it is a mild hurdle level, but once it surpasses or sustained at the current level, we see the further upside momentum up to the 820 level.
All right, that's Concore on the charts, but we also had the management we also had the shipping secretary TK Ramachandran, who's the shipping secretary who joined us to discuss the potential of the shipbuilding industry. He said that the shipbuilding in India is still at a very nascent stage, but the growth for the sector will sustain going forward. Let's go across and listen in to what he had to say about it.
The overall growth is good. And we expect the momentum to continue, if only because apart from the economic growth, the logistics costs have to reduce, which means there is a requirement for more ports, and the reduction in logistics costs will have an impact on the goods that are brought in or taken out. So we think that overall the sector is going to do very well. I think the outlook for the Northeast is very good, and the Far East policy of the government is also helping the region to grow, and this is leading to an increase in the cargo. Shipbuilding is a nascent industry in India. 1%, we just produce 1% of the ships in the world. We own 1% of the ships in the world. We do not have a financing insurance ecosystem. We do not flag a large number of ships in India. So this entire ecosystem needs support.
Okay, that's the word coming in from the shipping secretary. But on that note, we'll slip into a very short break and bring you more buzzers on the other side when we return. So you stay tuned.
Welcome back. You tune in to Market Fatafat, where we are getting you all the top buzzers in trade today, and why they're buzzing on the back of research or on the back of technicals. But let's come to you then, Kapil, on the technicals. Nestle is what you've picked out for us. Tell us what you see on the charts for Nestle, because the FMCG pack, we did see a bit of a consolidation coming in for the FMCG pack, but Nestle specifically, what do you see on the charts?
See, you are right. After the FMCG, FMCG sector has declined and they have been under the tank-wise and price correction for a long time. But when we have seen that after the extended move in the market, which is up by Nifty is up by 15%, and from past 10 to 15 trading sessions, we are seeing that the market is consolidating in one particular range, 24,500 on the lower side and 25,100 on the higher side. So in that scenario, there are some short and off-late momentums in the FMCG we are expecting, because when there is a dullness in the market, so somewhat FMCG takes the front seat. And in the case of the Nestle is also means on a higher time frame structure. The stock has been declined a lot. It has gone through a huge time-wise corrections, but now the initial momentum is likely to pick up. It is at an initial stage, but yes, we are expecting that there can be a little bit upside jump that we can see on the higher side. And when the specific market is not doing anywhere, so they are likely to be a good bet at this particular point. So 2427 is the current level right now. So if the thing pans out on the higher side, so we expect that the 2550 to 2600 can be the upward potential.
Okay, so that's the take on Nestle. Let's move on from that. And Ravinder, Adani Power is a stock that you picked out for us. We have a positive note coming in from Incred. Tell us what it is.
Well, as Incred Equity has come out with a note on Adani Power, and they have initiated a coverage on this with ad rating with target price of rupees 649. They say that the Adani Power is the India's largest private thermal power producer and is focused on thermal energy, and the company has made a strong turnaround and is now on a growth path. They say that its company has a plan to increase its power generation capacity by 75% to meet India's rising electricity demand, and most of the power sold of the company is through PPAs that allow fuel costs to be passed on and ensuring steady cash flow. And this the company is seen as a long-term value generator with earnings is expected to grow steadily, and they expect company to achieve a EBITDA at rupees 292 billion in FY28 and EBITDA CAGR of 11% between FY25 to 28, and they forecast a PAT CAGR of 9% over FY25 to 28. So a bullish note on Adani Power, but the stock is not reacting positively, and stock is slightly trading in green 0.2%.
Okay, so a sharp spike when this note hit the street, but other than that, the stock has simmered down slightly in the green nonetheless. Let's move on and talk about Indus Bank. The stock has been in focus for a lot of days now, and we have some fresh news flow coming in last evening, wherein SEBI has banned the bank's ex-CEO, which is Mr. Sumant Katpalia, and 4 others from buying and selling shares in the securities market. SEBI is going to be completing insider trading probe expeditiously, and they've impounded 19.7 crore rupees in the Indus Bank insider trading case. MD and CEO Sumant Katpalia, this is what SEBI believes, was aware of derivative accounting discrepancies by the 4th of December itself, and the emails from Indus Bank CEO flagged huge impact from derivative accounting issue, and this is why SEBI believes that it was an insider issue which the insiders were very well aware about. The bank failed to classify discrepancy as unpublished sensitive information until 4th of March 2025, which was still under the UPSI period. So on the back of that, SEBI has flagged off Indus Bank, the management and the CEO, ex-CEO rather, and 4 others have been barred from the securities market. On the back of that, the stock is doing very well today, up 2% as we speak.
Alright, that's Indus Bank in focus on the back of that news flow. But coming to you, Kapil, you picked up Paytm for us. Tell us for Paytm, what do you see on the charts? If I look at the chart for Paytm, today it's up 1.5%, but in the last 6 months also it has been in a consolidation mode. It's down almost 4%. So tell us from here on, do you see this counter picking up now?
So yes, basically the financial services sector has been in the limelight, and they have pushed the market on the higher side. But within the financial services sector, if we do the little bit more bifurcation about the banking stocks, NBFC stocks, financial technology stocks, so Paytm or let's say Policybazaar, they did well, quite bad. They have gone through some sorts of a correction, so it is in a kind of the digestion process of the previous upside momentum. Now from past couple of days, we have seen some sorts of further upside momentum. So we believe that there was an upside momentum, that upside momentum got digested, it has generated a new strength to move on the higher side. So right now again the stock price is an 866 level, and we are expecting some sorts of a trajectory from here onward.
Alright, so that's Paytm on the charts, but moving on to the next counter, which is Bandhan Bank. Now, Bandhan Bank is in focus on the back of a note coming in from Jefferies. Jefferies has reaffirmed a buy rating on Bandhan Bank with the target price set at 195 rupees per share. Now, the commentary followed a roadshow in Singapore and Hong Kong, where Bandhan Bank's management, including the CEO, executive director, CFO, and investor relations, presented their insights and future outlook. Now, the management of Bandhan Bank has indicated a cautious approach towards the asset quality trends, especially with the implementation of tighter lending caps starting from April. Now, despite these regulatory changes, the bank has a relatively low proportion of leveraged borrowers, which positions it favorably in terms of risks. Now, looking ahead, the bank's management anticipates a decrease in credit costs starting from the second half of the financial year 2026. Moreover, they expect the ROA for the fiscal year 2026 to remain stable on a year-on-year basis. In the long-term perspective, over the next 2 to 3 years, the share of microfinance institute, the MFI loans in the bank portfolio is projected to drop around 40%, from a 40% to 35%. Now, this shift, coupled with lower credit costs and operational leverage, is expected to increase the bank's ROA between 1.8 to 1.9% the fiscal year FY 2028. Now, Jefferies has concluded that the valuation for Bandhan Bank share is reasonable, and they have reaffirmed a buy rating on the stock.
Okay, so that's the focus on Bandhan Bank today. On that note, that's all the stocks that we wish to highlight on the show. Rabinder, Kanishka, as well as Kapil and Ashish in the previous segment. Thank you so much for joining us. Before we wrap up on this edition of Market Fatafat, let's get you some more news. The centre has warned airlines and online travel aggregators against dark patterns to lure customers. In an important meeting chaired by Consumer Affairs Minister Prahlad Joshi, the government has directed airlines to stop practices like pushing for higher airfare and false urgency to book air tickets on tour packages. Sameer Dixit, my colleague, is joining us with more details on this.
It seems that the government, specifically the Consumer Affairs Ministry, is quite unhappy with the airlines. The tactics that they are using to lure the customers, to attract the customers to book the air ticket, and not just the airlines, even the online travel aggregators, they are under the lens. So basically, government or the Consumer Affairs Ministry, they chaired an important meeting with the stakeholders on the issue of dark patterns. The airline representatives were also part of this meeting, and the government gave a clear message to the airline representatives that the tactics or the dark patterns that they are following to lure the customers, to attract the customers, it is unethical. The practices falls under the unfair trade practices, and it should be stopped. So basically, government has highlighted a couple of issues. For example, the customers are given sort of a false urgency that they need to book the ticket, or else the airfare may go up even higher and higher. That sort of false urgency, even misleading advertisement or distrust kind of advertisement is being shown on the website, even on the online travel aggregators platform as well. In addition to this, the seats which are paid seats in the aircraft that are actually being pushed by the airlines, the algorithm that they are using, they are firstly pushing the paid seats to be sold first. So these sort of tactics falls under the category of dark patterns, and it needs to be checked. So the government has given a clear message that first the airlines, the travel aggregators, they have to fully abide by the guidelines that has been issued by the Consumer Affairs Ministry on the subject matter of dark patterns. Secondly, now the airlines and the aggregators, they have to do an internal audit to check these dark patterns. They have to stop it, and they have to submit the audit report to the government, to the ministry as well. And government will keep a close eye on these sort of practices which are being followed on their portal, and if found guilty in coming days, then there might be some strict action that will be taken up by the government or the Consumer Affairs Ministry.
All right, with that, it's a wrap on this edition of Market Fatafat. Snehi and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Market action continues on 18 hours.